Good afternoon, and thanks for joining us for this afternoon's Cuppa Club with Tim Rooney, CEO of Salad Money, and Phil Hyett, who is the CFO. Also with us today is my esteemed colleague and investment manager at Ethex, Pal Linares. My name is Jerome Heusinger. I'm the senior development manager at Ethex, supporting Salad Money in their second bond offer on our platform. Before we get started, there's some housekeeping to do. I'd like to let you know that the Cuppa Club is recorded and made available to watch, and we also edit this to a highlighted version. Please be aware that this is not a financial promotion, and if you do need advice, please talk to an independent financial advisor. The Cuppa Club will run for 30 to 45 minutes. It's an opportunity to meet and ask questions of Tim and Phil and hear about why Salad is such an impactful organization, how it aims to achieve its goals, what your investment is funding, and the challenges and opportunities. Feel free to ask questions in the chat box, and we will take questions as we go along. So just before Tim and Phil introduce themselves, a little bit about the bond offer and what it's supporting. Following a very successful previous raise earlier this year on FX, Salad Money have launched a new innovative finance ISA eligible 9% bond offer that will facilitate, in their estimation, £60 million of affordable loans for individuals who are locked out of traditional finance options by poor credit scores. It will help them avoid unregulated, high interest lenders, and it will help them to start to rebuild their credit rating. Right, that's enough from me. Tim, Phil, could you kick it off, introduce yourselves and the offer? Thank you.
Sure. Shall I go first, Philip? Hi, everyone. My name's Tim Rooney. I'm the CEO of Salad Money. We are a community development finance initiative business. We have been in existence since May 2019. We're now the largest consumer lender CDFI in the UK, and very pleased to be on here and answer any questions you may have.
And I'm Phillip Hyett, the CFO. I've been with Salad for 4 years. My background is in private credit and asset management. And I was drawn to join Salad, firstly because of the passion of the individuals here to improve people's lives. And also I was drawn to the very innovative use of open banking technology to sustainably serve a market that has been very poorly served historically.
Thanks. So let's just kick off with the need for the services you offer. I know you've put out a number of really helpful and instructive videos over the last few months. Perhaps describe some of them. How many people in the UK are affected by poor credit ratings? And what's the reason for this? How does it impact them?
It's a good question. So there are, according to PwC, a couple of months ago, they produced a report. There are 20 million people in the UK that have a hard time accessing credit in the UK, and a lot of those individuals have an impaired credit file. And the credit file is used by mainstream funders to make appropriate and affordable lending decisions. But unfortunately, a lot of the people that we see are individuals who are in the lower 4 or 5 deciles of income who have a poor credit score. And that was the real reason why we decided that open banking was a better proxy to make an affordable and appropriate lending decision to those individuals. For those of you that don't know, open banking is an FCA regulated process that allows us as a lender, with the consent of the applicant, to look up to 2 years worth of transaction data. And within that, we can see a lot of their income detail and a lot of their fixed expenditure, and also their disposable income. We use a lot of machine learning capability to review all of those data points. And from that, we can make appropriate and affordable lending decisions. It's been around now for 5 years, and we still are the sole user of open banking only in the UK to make those lending decisions. It's rather a shame that other lenders haven't adopted open banking. We're a great proponent of the use of open banking, and in conversations we have with the FCA and others, we have won awards for our use of open banking to reach those consumers that typically would be locked out of the market.
So tell us a little bit about your typical customer, Tim, Phil. Who are they, and what problems are they facing? Bring it to life a little bit.
Yeah, we've got a social impact report, which I believe you can view on our website, saladmoney.co.uk. But typically, the majority of our borrowers, 70% of them are female. They are living in social or privately rented accommodation. About 70% of them are in that situation. A lot of those individuals are in areas of high deprivation, so the northwest, the northeast, Wales, and other areas. They are, as I say, typically individuals who are in the lower 4 or 5 deciles of income. So to bring that to light, these are people who are taking home between £1,500 and sort of £2,500 a month. They are individuals that we know have poor credit scores, and we know that because 1 month after we've made a lending decision to the accepted candidates, we actually look at their credit score and their credit file, and we know that a staggering 90% of our customers have what TransUnion, one of the credit reference agencies in the UK, say is that they have a subprime credit score. So they are typically individuals that are locked out of access to mainstream credit. We also notice that they have very low financial resilience. They're not savers. They have very little savings in most cases. And when they have a life shock of one sort or another, they have turned or have used high cost credit. And I'm talking about credit that's over 100%. And clearly within the open banking, we can see what forms of credit an individual has been using before they come to Salad and apply. Open banking is a fantastic proxy because it has allowed us to make lending decisions where other lenders would typically say no to someone who's got, for instance, a county court judgment. And as a result of that, we have lent over £115 million now to some 90,000 customers. So it's been quite transformational looking at the individuals. Now we have a very high decline rate, I think, which we should mention. So we're only accepting about 5 or 6% of the people that apply to us. And one of the things that we do as a CDFI is we will identify areas that the consumer may need help with. So debt advice, we'll signpost those individuals out to step change. Gambling, we talk a lot about, we see a lot of people with online gambling. Again, that's something that's not seen in a credit score. And we help people through our unique use of an in-application benefit calculator. We actually pioneered that a couple of years ago. It's now widely adopted by the rest of CDFIs, credit unions, banks, and other financial institutions. So we have some fantastic stories about helping consumers make sure they're going to get their full benefit entitlement. And there are, as Jérôme has said, some fantastic videos that we put out about some of those individuals that we've managed to reach.
Could we discuss an issue which comes up time and time again when we at Ethex discuss Salad and other CDFIs with our investors, which is the issue of APR, which is, for some people, it looks very high. you're dealing with people at the bottom end of the deprivation scale. So why the very high APRs, and why is Salad able to pay investors 9% this time, 10% last time, given the financial predicament of its customers?
Sure. Philip, do you want to sort of cover off the financial piece and then I can talk about the customers and loss rates, etc.? Would that be okay?
Yeah, sure. I mean, would you like me to address why we're reducing the interest rate from 10 to 9 during?
Well, that would be good as well.
Okay, sure. So, I mean, since we did the first bond raise just a few months ago, our cost of capital has fallen. Firstly, the risk-free rate, as everyone is aware, has dropped by 25 basis points. And we've also secured a larger and less expensive committed senior debt line in the intervening months. So Salad as an investment proposition has become significantly less risky. Nevertheless, we still wanted to offer a very attractive coupon to Ethex investors to reflect the fact that this is extremely valuable capital for us. Um, when we're writing £6 million worth of loans each month, a £900,000 bond raise seems fairly modest, but actually there's an enormous multiplier effect that we can utilize from raising these bonds. Um, and that's why you get to this fairly non-intuitive result whereby we raised £900,000, but we've actually managed to use that money to lend nearly £5 million in just a few months.
In terms of the costs, I think that's an interesting point. So unlike credit unions, we're not drawing on our savers' money. We have to go out and, as Philip mentioned, we have to go and obtain commercial credit at commercial rates, higher than commercial rates. We've also got a loss rate that we have from our consumers. The consumers that we're lending to, our loss rates are very controlled, they're very monitored by us, but we are looking at a 10 to 11% loss rate, which has to be borne by the business. Now, we're a very small operation. There are 36 staff now within Salad. We obviously have our operational costs, which are kept to a minimum. We've got all of the regulatory elements that we need to comply with, and we can talk about reporting and ensuring that we're keeping up with consumer duty. But a combination of our operational costs, our loss rate, and the commercial cost of funding means that we have to charge an APR that's appropriate to make this business sustainable. We are the lowest cost provider amongst all the other CDFIs in the UK. We would love to have a lower APR, and we believe that that will come at a point when we can get UK banks to support us. And that process is very much in train. We have conversations with UK banks. They want to become involved in this sector, but I think we have to prove to them that it's not as toxic as some of the previous bad actors, Amigo and others, who've left this environment. So it's an education process, and I think over time it would be our aspiration to get to a lower cost APR. But I think you're always going to be lending at rates in excess probably of 49% because of the cost of capital, because of the impairment rate, and also because of the OPEX involved in running this sort of business. We're very high contact with our consumers. So we ensure that we're dealing with the vulnerable customers. There are no penalties for missing payments or rescheduling debt. But one of the things we really do pride ourselves on is the ability to deal with customers when they hit a bump in the road. We're not talking about mortgage customers, a secured debt instrument there with high frequencies of repayment. Here, we expect our customers to miss 1 or 2 payments during the course of 12 months when they hit a financial issue, and we deal with them appropriately. So half of our business is made up of customer account management staff based down in Brighton and across the UK as well, who are dealing with those customers. So there are some costs that you just can't really escape from, and it's the nature of the people that we're serving means that we have to have more emphasis on dealing with those individuals.
So the question from Peter is, what is your actual APR to customers? And perhaps within that question, um, either of you could discuss the appropriateness of APR as a metric.
Philip, do you want to take the actual APR question and
Yeah, of course. So the initial APR to a new customer coming to us is 79.5%. We do offer subsequent top-up loans to customers, and these are subject to some very strict guardrails that we apply, which is they must have made at least 50% of their contractual payments, and they must be fully re-underwritten using open banking technology. So if a customer is able to come to us again and passes all affordability checks, we can lower the APR to 74.9. And then for a subsequent top up again, that rate can fall to 69.9. And we do see a commensurate reduction in our loss rates upon each refinancing, just because we are more comfortable with them as a customer.
And Phil, that what you've just described is elegantly exemplified by Jamie in your offer document, who's come back again and again and is seeing lower APRs.
Yes, I mean the key point is that our pricing is always risk based, so we're able to reduce the pricing when the risk justifies it.
one of the other things we do is to, unfortunately, the consumer's credit score doesn't improve as quickly as you may think. But we would love to hand those customers back into the mainstream. And, all of our customers bank with a UK bank. And we have had conversations with the big banks. And I think they're a bit surprised that we can lend to these individuals and get repayment. But obviously they have very strict guardrails themselves in place on who they can lend to. But we are in talks about potentially not only signposting, but handing those consumers back with the record of good payment to those banks that they've come from. And I think that's one of the things that's really important. If we can signpost a consumer to a lower cost of credit, we will do that. And you talk about the appropriateness. Let's touch on Consumer Duty. It's been in for a year now. Consumer Duty is a very powerful tool that's been put in by the FCA to ensure that the lending that you're making is appropriate for the consumer's requirement at that point in time. And I just want to stress that, all of our consumers, we've got caps as well on who we will lend to. So we won't lend to people who have excessive income because we don't think that's appropriate. We're very much tied to lending £1,000 to people in those lower 4 and 5 deciles of income. And in fact, one of our investors, Fair for All Finance, which is the distributor of the dormant asset monies from HM Treasury, have a restriction on the amount we can lend and the individuals that we can lend to. So we're very convinced that we have appropriate lending that is affordable for those consumers.
And perhaps
And
mention the
sorry,
role.
June.
Yeah, sorry.
Just to add, I mean, as an open banking lender, we're in a very privileged position. We can see the other types of debt our borrowers or applicants are taking on, and we estimate that on average our customers are saving about £500 in interest on each loan. Typically, these are borrowers who otherwise are going to lenders charging APRs in excess of 1,000%. So I think that also needs to be borne in mind, even though the headline APR might sound very high.
Yeah. So you mentioned the extent to which Fair for All not constrains, but watches what you do with a view to optimizing the experience for the consumer. Could you also perhaps mention the role of your independent oversight body? Who is on it? What do they do? And all in terms of reassuring people that about APRs and the downward trajectory.
Sure. So we have an independent oversight body. It's currently we have Dame Natalie Evans and Lord Ian McNichol who sit on that board. They attend our board meetings as observers, and they have actually commissioned research themselves directly with the University of Edinburgh using our data. And what I would say is they are fierce defenders of the consumer's rights, but I think consumer duty and our adherence to that has made their job slightly easier. But we are looking all the time at other ways as to how we can deal with the appropriateness of our lending. And as Philip said, we do see some very inappropriate lending that's being carried out in the 2 years worth of data that we get through for consumers. But yeah, we're very concerned about the lending that we do is appropriate and affordable for those individuals.
Hal, did you have a question?
Yeah, thanks. Would you, Tim or Phil, provide visibility to the attendants on what concrete impact will be achieved by your support to this new solid money investment?
Sure. I mean, let me just say, before Philip goes into the sort of financial, what this investment means to Salad, I want to stress that all of this money is being used to deploy new lending. None of it is being used for any operational costs, any transformation within the business. Every pound is deployed as soon as it's drawn from Ethex into our lending. So, Philip, do you want to explain what the lending will do for us?
Yeah, because I previously mentioned that multiplier effect, and I think that is really key. So that multiplier effect is a function of three things. The first, and most importantly, being what Tim's just mentioned, which is all of the bond is used for new lending. Um, uh, Secondly, we have senior committed debt lines in place that we can use alongside that capital. And we have great visibility over that debt. We think we can increase it to 150 million pounds over the next 5 years. But senior debt alone isn't enough to grow the loan book. We also need junior capital, which is what this Ethex bond provides. And thirdly, our loans pay down very quickly. So they're all monthly amortizing loans. So I mean, I remember explaining this the first time around, but I think it's worth repeating. So, let's keep the numbers simple and say we have £1 million worth of, we raise £1 million bond. All of that money can be used for new lending, and we can deploy it very quickly. We can deploy it in a matter of days, potentially. We then have £1 million worth of receivables and asset from our perspective on our balance sheet. We can use that asset to borrow more money, and we can borrow up to 95% of the value of those loans. We get that money in, we lend it, we use the resultant receivables to borrow more money. In the meanwhile, we're getting principal and interest receipts back in from the original set of loans. So very quickly, you can see how it snowballs, and a £1 million bond raise can facilitate tens of millions of pounds over a 5-year period. So that is why these bonds are so valuable to us, and the reason we've come back to market.
Thanks. What was I going to say? Benefits. You talk a lot about the benefits that you unlock. Could you describe that and the opportunity there?
So yeah, so all of our applicants are put through a benefits calculator at the point at which we obtain their open banking, and we can identify whether or not they have an entitlement to an increase in the benefits that they may be claiming, or indeed if their entitlement could start from day one. there's a particular video, I can't remember which one it is in the series 2 that we've done on YouTube, of an individual that was receiving some benefits, but then went on to get a DLA allowance for her son of £350 a month. That's transformational for a lot of individuals. There's a staggering £19 billion worth of underclaimed benefits in the UK. And we have been highly successful with this particular approach. It's an approach that's available to everyone. We make that calculator available for further analysis for anyone on Salad Money Mind, which is a website that we provide for financial education as part of our commitment to social enterprise. But yeah, it's been widely adopted, which has been fantastic. So it's a very useful tool for individuals.
In terms of repayment for investors, would you provide some color on what is the plan, if the idea is to refinance this bond, or how will this be repaid?
Sure. So there is a possibility of refinancing the bond. We have, for example, a social impact family office who invest with us. We're in talks with the ESG fund, so refinancing is possible. I think probably the more likely is just the bond is fully redeemed, and to just to sort of give a sense of this, we currently have principal and interest receipts coming back to us each month of about approaching £5 million. Now, in 5 years' time, we expect that number to have quadrupled. So we would expect to be receiving £20 million a month. So when we're talking about those sorts of levels, we can very easily redeem a £400,000 bond from that cash flow.
Could you describe the nils, the nil interest activities where you are involved? Who else is involved? What's your contribution to this initiative? What is the impact of this compared to your conventional, if you like, activities? And what are the learnings to date?
Sure. Okay. So the NILS program was set up by HM Treasury with Fair for All to provide bizarrely no interest loans to customers that we would not normally lend to. Now, we were one of 6 or 7 participants in that process. £10.8 million has been dispersed within the last 18 months. Salad was able to disperse 8.6 million of that amount to customers that we would not normally have lent to. So those are customers that failed to meet our criteria on a score basis using open banking, but passed the credit rules that we have in place. So, I mean, we're talking about typically £1,000 over a 12-month period with no interest. And we, as I say, we've been able to deploy £8.6 million into that sector. The learnings from that have allowed us to extend our risk appetite into a portion of those individuals that normally we would have said, no, we think they're too risky for us, even though they've passed the credit rules. So it's given us some fantastic learnings. Have a look at our Trustpilot reviews. You can get a sense of the need from customers, but we've been sort of bowled over that there are people out there who, on the face of it, don't look like they could service a loan, but have managed to service a nils repayment. It's an initiative that, hopefully it will be revived. And I think there are some other things that Treasury and Fair for All are looking at, which hopefully we'd be an active participant in. But it's been a fantastic exercise, very much like the exercise that we carried out with the NatWest hardship grants at the tail end of 2022, 2023, where we were able to give out £100 grants to people that were ineligible for a salad loan. So we're always looking at trying new things in our sector, and Nils has been a great piece of learning for us.
So just a general question. Obviously, the CDFI sector in the States is enormous, and there's been huge amount of commercial bank buy-in, which is something that you mentioned earlier on in the UK as being much more nascent. How do you see this developing over the next few years, particularly with a new government?
Sure. So in the States, banks are mandated to contribute into the CDFI sector. So capital coming into that sector is sort of unrestrained, and all of the US banks have to contribute to that. Now, we've got a Fair Banking Act that's being looked at the moment. I know Tulip Sadiq, as recent as Tuesday night at the House of Lords, was saying that Labour are very much behind financial inclusion. We can see, and in our conversations with banks, we know there is a sort of pent-up demand to assist the sector. But I think there are some historic investments that may have been made in the sector that still carry a concern for those banks. And I think that that concern is borne out of by the level of complaints that are made for unaffordable lending from the companies that have now gone. People like Safety Net Credit, people like Amigo, Wonga. These are all household names. They all received large investments from UK banks and others. But guess what? None of them really were called out until those complaints snowballed into their eventual demise. So I think the UK banking sector is reticent to invest. I think they need to be shown that you can make an investment into this sector. And that's one of the things that we really want to show and work with our regulator, the FCA, and others to say this is a safe environment if you use appropriate tools. And we believe that open banking is that appropriate tool for making those assessments. I mean, normally in this sector, you would expect to have between 20 and 30% complaint levels. I don't know what the percentage is, but we've had 16 complaints. Someone smarter than me can probably work it out. 16 complaints out of a total of nearly 90,000 lending instruments that we've done. So it's a very low number. And the FOS responses that we receive back in relation to those complaints are now starting to use the terminology that we have when we make an affordable decision. So we're able to make that balance between fixed expenditure, disposable income, the indebtedness, the behavior as well shows up, how they're reacting with direct debits, how they're meeting their other commitments, how the cost of living has eaten into that. So I think complaints and the continuum of low complaints for us could hopefully bring on investment from UK banks into this sector. It's sorely needed.
Pal, any more questions?
No more question from my side. Thanks, Ron.
Okay. No more questions from anywhere. So thanks to Tim and Phil. So the 5-year bond offer is open up to the beginning of January. You can invest from £100 and target a potentially tax-free return of 9%. It's off to a really good start, with over 20% having been raised already since launch a week ago. We'll be sending updates on the progress, so make sure you're signed up to get emails from us, and you can see how the offer is progressing on our website at ethex.org.uk. So thanks again for your time. Last words from you, Tim and Phil.
Yeah, I mean, any questions that you may have, please funnel them back through to the team at Ethex, who've been incredibly supportive. There's a wealth of information available on the Salad Money website, not just our social impact or gambling reports, but some of our previous reports that we've done with the University of Edinburgh, which are incredibly insightful and perhaps may give potential investors the understanding of the types of individuals that we're lending to and the types of credit that they're using. I think that comes over very strongly in the reports that we've made.
Yeah. Good. Thanks both. All the best.
Lovely.
Thank you for
Thank
your
you.
time and your support. Thank you.
Thank you.
Bye.
Bye-bye.
Bye.
Bye-bye.
Bye.